Welcome back to our series on becoming an entrepreneur and starting your own consulting business. Today, we're tackling a big question. Why should you incorporate? You might be thinking, I'm already doing some consulting on the side, getting paid, and just putting the money in my personal bank account. What's the big deal? Well, when tax time rolls around, untangling your salary from your business income can become a real headache. More importantly, without a formal business structure, you could be missing out on significant tax benefits. You can't write off business expenses as effectively against regular wage income. By creating a clear separation between your personal finances and your business, you open up a world of new possibilities. You gain more financial choices and, crucially, you protect your personal assets, like your house and car, from any business-related liabilities. When you incorporate, you create a legal business entity that is entirely separate from you, the owner. Think of it as creating a new person in the eyes of the law. This structure is a game changer for both legal protection and taxes. The type of business you form will determine which income tax forms you file, so let's explore the most common options. First up is the LLC, or Limited Liability Company. This is a very popular choice because it offers the best of both worlds. It gives you, the owner, liability protection, but it's also incredibly flexible in how you choose to be taxed. Next, we have the corporation, often called a C Corp. This is a more formal structure with a board of directors, corporate bylaws, and shareholder meetings. It is a bit more complex but can be the right fit for larger operations or businesses seeking venture capital. Then there's the S Corporation, or S Corp. This is a separate business type but rather a special tax election that an LLC or a C Corp can choose. Its main advantage is that it helps you avoid what's called double taxation, where the business pays tax on its profits, and then you pay tax again when you receive those profits. With an S Corp, the profits and losses pass directly to you, and you report them on your personal tax return. You can also pay yourself a formal salary, which has its own benefits. Finally, there's the nonprofit corporation. If your mission is focused on charity, education, or environmental goals rather than making a profit, this is the path for you. It has its own unique filing status and rules. And of course, there are simpler structures like sole proprietorships and partnerships, but they don't offer the same liability protection as an LLC or corporation. Once you've decided on a structure, your first real step is to file for incorporation with your state's government agency. Every state has different rules, so a quick Google search for your state's requirements is essential. This course will use California as an example, but the principles are similar everywhere. In some states, you might be required to use an incorporation service provider. These are companies that handle all the initial heavy lifting for you. They'll help you search for an available company name, draft your articles of incorporation, and file all the initial paperwork with the state. Many of these services, like My Corporation, which is popular in California, can also help you get your Federal Employer Identification Number, or EIN, for free. A basic plan with a service like this might start around $99, with a similar annual fee to maintain the service. They're incredibly helpful because they also send you reminders for important state filings, so you never miss a deadline. This is really the first critical investment in your business. I strongly suggest you research the service providers and the typical processing times for approval in your state. Now, let's talk about your business name. This is a huge deal. Your registered company name protects you at the state level. If you plan to operate nationally, you might also want to look into getting a trademark, which offers federal protection. Sometimes, you might also need to file for a DBA, which stands for Doing Business As. This is for when you operate under a name that's different from your legal corporate name. And of course, you'll want to check if a website domain matching your business name is available. Your incorporation service provider can usually help with the name search, registration, and DBA filing. If you're curious and want to see what the paperwork looks like, you can easily find the forms online. For an LLC in California, you can Google LLC to one form. California also requires a statement of information to be filed every 2 years, which is Form LLC 12, and it comes with a small $20 fee. Your state will have similar requirements. Let's quickly cover a couple of accounting terms you'll hear. First, the difference between a calendar year and a fiscal year. A calendar year is simple, January 1st to December 31st. A fiscal year is any 12-month period that ends on the last day of any month asterisk, except asterisk December. For example, July 1st to June 30th. You can start your business at any time of the year. The other key concept is your accounting method, cash versus accrual. With the cash method, you record income when you receive the money and expenses when you pay them. With the accrual method, you record income when you earn it, even if you haven't been paid yet, and expenses when you incur them, even if you haven't paid the bill. I personally prefer the accrual method because it gives a more accurate picture of your business's financial health over time. A friendly CPA can give you great advice on which method is right for you. Let's dive a little deeper into the S Corp, because I've seen so many consultants choose this tax status. The official IRS website has a fantastic, consolidated view of what an S Corp is. Essentially, S corporations pass their income, losses, deductions, and credits directly through to their shareholders. You, the shareholder, report all of this on your personal tax return and pay taxes at your individual rate. This is how you avoid the double taxation that C Corps face. However, there are rules to qualify. Your company must be a domestic corporation, have only allowable shareholders, which means individuals, certain trusts, and estates, but not other corporations or non-resident aliens. You can't have more than 100 shareholders, and you can only have one class of stock. To make this election, you need to file Form 2553 with the IRS. Both the form and the instructions are publicly available online. So, to recap today's lesson, think about why incorporating is a smart move for protecting your personal assets and optimizing your taxes. Take some time to review the different corporate structures LLC, corporation, and the S Corp tax election. I highly recommend downloading the initial LLC formation forms for your state just to familiarize yourself with the information required. Deciding on your business structure is a foundational step, so don't hesitate to seek professional help from a lawyer or CPA if you need more personalized insights. In our next chapter, we'll get into the specifics of filing requirements, which will give you even more clarity on this process. Thanks for watching, and be sure to subscribe so you don't miss the next step in your entrepreneurial journey.